Cosatu is throwing its weight behind Friday's banking sector strike. The Federation is backing the call from the South African Society of Bank Officials to strike against retrenchments in the sector. Now, Business Unity South Africa wants to interdict this strike action on behalf of the South African commercial banks. Now, for more on this, I'm joined in studio by Cosatu's General Secretary, Bheki Ntshalintshali. Mr. Ntshalintshali, thank you very much for your time. Why are you backing this strike in the middle of what looks to be a crisis in the country economically?
Good morning, and good morning to the viewers at home. We're not only backing SASPO in these cases, we're part of it. There are two planned industrial action that we're going to take. The first one is on the 27th, which is led by the financial sector, and the second one is on the 7th of October, which is a decent work day. Both of them are highlighting the issues of job crisis. Both of them are highlighting the issues that were bleeding jobs, and seemingly business is not even committed to the undertaking that they've taken during the job summit last year that was convened by the president. They have not been able to live to their commitment, but worse off it, they are just giving notices of retrenchment. This sector, of course, is a different one in a sense that they are not claiming to be losing money. They are making a lot of money. If you look to their books, they are healthy, and they're just replacing people with intention with machine and etc. and etc.
Someone from the NEDLEC at that council says that the figures that are being bandied about as to the retrenchments of workers in the banking sector are not actually true. They're not as inflated as you, the unions, are making them out to be.
Look, the union are on the shop floor. Far from NEDLEC. NEDLEC is just an institution where we all come together in dealing with those things. Those figures can be disputed. There are indications that can be verified by SASPO in each and every branch where jobs have been lost. So it's not a question of just thumb-sucking.
But NEDLEC is where the nitty-gritties are discussed, Mr. Ntshalintshali, and you are very much part and parcel of that.
How is it that I don't know
your figures differ
when we're
from
referring
theirs?
to NEDLEC, who you will be referring to NEDLEC. We're not discussing figures at NEDLEC. SASPO and the Bank Association and each individual bank, in terms of SASPO, have indicated to each bank how many people have lost jobs, how many people are about to lose jobs, how many branches have been closed, and each of the branches that have been closed. If you take, for example, Standard Bank, now you're going to ABSA and going to Nedbank. So we're not in the process of verifying this information. The information is easily available, can be backed by fact. The issue, of course, is that on the 27th, we're going on a protest action. We're mobilizing our members to back the financial sector in this particular dispute.
Mr. Ntshalintshali, we are on the verge of being downgraded to junk status by one remaining rating agency, Moody's, after the medium-term budget policy statement by the finance minister is tabled next month. And if it doesn't give any hope, that particular statement, then experts are saying that it goes without saying that we are going to be downgraded. Why are you dismissing what the finance minister, Tito Mboweni, has put on the table, a discussion document, but you've dismissed that as incoherent?
It's because it is incoherent. You have to look to the document. Many of the other things that are positive is a repeat of what we already know, whether in the growth development plan, whether they are in the EPAP 3. So there are many issues that are there that already exist. The question is the question of implementing those issues. Even if you were to accept the Tito Mboweni document, it's not going to save us in the downgrading in the next 3 months. It's about policies that are going to take years and years in order to finalize them, to realize the benefit out of it. So whether there's a document on the table or not, it is not going to save you from downgrading if the issues of downgrading is going to happen. Because downgrading is going to look as to what has happened up to so far, what is likely to happen in the next 3 months. In those documents, all the issues in those documents, both the positive and the negative, are not going to have an impact during this period of evaluation.
And I like the use of positives and negatives. So how big are the positives if you weigh them up against the negatives? And are you not going to use the proverbial throwing the baby out with the bathwater? Because you had an expert just sitting where you are moments ago who said there are very good aspects about that 77-page document.
Yes, there are, but those are not new. That's what we are trying to say. Take the document, the 77 pages, and say, what is new that is good? Absolutely nothing. It's a repeat of what we know exists that needs just to be implemented. You don't need every time you've got some challenges, you have to change the policy in regard to those issues. Implement what you have before you are thinking and repeating the same issues and you bring them as new. They are not new, but there are more negative issues that they are talking about. For an example, we're coming from last year promulgating the national minimum wage. We have amended the law to extend the bargaining council, and the minister wake up and says, no, those things are bad things. So you can't every 6 months as a government try to change policies. Nobody will believe you in that particular respect.
Bheki Jali, thank you very much, sir, for joining us here on the South African Morning. And he is the General Secretary of the Congress of South African Trade Unions. Let's check in now with the weather.